After a third retest and rejection from 25,200, Bitcoin has reached our first lower target of 24,000. On the hourly chart, the Gaussian channel is showing signs of weakness and suggesting that this downtrend is only just getting started. Let's go ahead and discuss the price action. Okay guys, welcome back to the channel. Thank you for tuning into today's video. I hope you're having a fantastic day today. We're here to talk about Bitcoin and specifically the rejection from 25,200 and the continuation down to 23,800. Will this downtrend continue or is this just another healthy correction? Let's get into a video and find out. Now before we get started, smash the like button, hit the comment button. If you've got any questions, go ahead and ask me in the comments. I do check every single comment. And of course, subscribe to the channel for daily videos on Bitcoin. We focus on the data, the charts, and the technicals, as well as market data, economic data, and the broader market. So you can also find us on Telegram, guys. This is going to be that second link down below. Access to charts, videos, analysis, news events, economic data, and educational posts, including our VIP channel with exact entries, targets, and stop losses in our trading signals, and a group chat. If you are interested in, you can go ahead and contact us via that free channel in the pinned comments. It will be the second pinned comment over here, membership details, and of course, our trading track record can be found over here. Let's get into the video, starting of course with the market data. For Feb, we are up 5.1%, 24-hour liquidations are up 269%, and 24-hour volume is up 89%, coming under just 100 billion. Volatility and volume, by no surprise, has come back into the market on week open. Usually during the weekend, we don't see a lot of it. In the week start, we generally see a lot of volume coming back into the market, which is what we've seen. Volatility is 2.58, still quite high, but on the decline a little bit. And again, like I said, liquidations are very high, with longs being aggressively liquidated on that drop toward the downside. We were talking about this yesterday. In yesterday's video, we were discussing the momentum on the smaller time frames was starting to drop. It was signaling, it was warning us that a continuation or a rejection was incoming. It told us before it happened. We trusted the data, we saw a rejection, we came toward our exact first target at 24,000. Again, the question is, will this continue? We'll answer that today, but let's get into the data. So the DXY has opened, it is opened above our support line, which of course is very bullish, and again, is very bad to see for the stock market and for Bitcoin. As long as the DXY remains above this little blue box over here and that 50 MA, we are technically developing an uptrend. So right now we are developing a larger time frame uptrend. If we do bounce from this level, we will be continuing into that uptrend. How high can we go? We're looking at some of these lows over here. So we're looking at 105 as our first target. Moving on to the Dow Jones, we can see not a lot of price action has occurred over here. Again, we are still within our symmetrical triangle. A daily close above our resistance or a daily close below our support will determine the directional continuation for this asset class. Okay, moving on to the S&P 500, we can see we're still hanging on by a thread within that support zone. We are looking at a rising channel breakdown. If we do continue through the support zone here, we will expect a continuation toward the downside, looking at 4,000 to 3,900 as a target on that one, guys. So very interesting stuff. And of course, bond yields are currently still above the 4.6 resistance, so it is looking okay. Let's get into Bitcoin, but I wanted to briefly interrupt today's video to discuss my favorite exchange, Bitget. If you're looking for a safe, honest, reliable, and accurate exchange, look no further than Bitget. You can sign up by the link in the description to support the channel and get access to 3 exclusive perks. That being up to $5,005 in trading rewards, up to 15% discount on your trading fees, and exclusive access to our MegaWhale promotion campaigns that we run every few months. Alongside that, guys, Bitget is a non-KYC exchange, meaning you do not have to KYC. It is completely optional. Bitget also has a protection fund that secures user assets against external hacks and threats in the space. Alongside that, guys, Bitget offers up to 125x leverage on futures with extensive amount of trading pairs and liquidity on the market. I highly recommend signing up to Bitget. It is the exchange I've been using for over a year and a half now, including all of our members. If you're interested in signing up, trading there, and supporting the channel, you can do so with the link in the description. Thanks for listening. So there's a heap to talk about. So starting on a larger time frame, guys, Bitcoin has closed a weekly candle a 1 week candle underneath the 200 EMA, the 200 moving average, sorry, and the $25,000 resistance. If we go back to our larger time frame chart over here, we can see that Bitcoin is now underneath the 200 moving average on the weekly and has failed to break above that level once more, rejecting and closing below. Now that doesn't necessarily scream reversal. That is not enough information to tell us we're going to reject and go down, but what it does do is it delays the confirmation of a continuation upwards on the macro for another week, okay? So it gives us another week window where we could reject, where we could reverse, where we could shift that macro environment toward the downside again. And that is something we do have to be aware of, because a whole heap, guys, can happen within 7 days in the market. Within 7 days, we could blast through and get rejected. We can blast through and close above, or we can reject all the way back down. A lot can happen in 7 days. So the fact that we've closed under here on a 7-day candle is something of concern. It's definitely something we should be looking at going forward. Moving on from that, guys, we do have to pay attention to the short time frame. As we said in yesterday's video, we noticed many things. We said momentum was dropping on the MACD, okay, reflected on the RSI, and even more so on the market cipher B. So let's go ahead and quickly change some of this stuff over. Market cipher B, we'll go on to the smaller time frame again. As we can see, guys, on the 6-hour chart yesterday, we said momentum was falling. We saw MACD converging, we saw red dots print on the market cipher B, and we saw the RSI plateau. All of this was signaling a shift in momentum toward the downside. Still, we have positive momentum, right? We have positive momentum here, we have positive momentum here. We're technically still heading upwards. However, we have weakened in this momentum. We have positive weakening momentum. This is suggestive of a reversal. This is suggesting the overall trend is starting to break. This uptrend we have been in ever since the 14th of Feb is starting to lose its strength and starting to reverse at macro resistance whilst we have that weaker close under. All of these things go to support the fact that there's a higher probability we do not just break through 25,200, we get rejected, we correct some more, and then take another stab. But again, guys, we'll talk about that in this video. So hang on to your thoughts, hang on to your questions. We'll answer everything in this video. Moving on to the hourly. How has that affected the chart? If we look at the Gaussian channel, and the Gaussian channel is one of the best indicators, guys, at predicting the overall strength of trends and the overall trend itself, whether you're on an aggressive uptrend, a weak uptrend, an aggressive downtrend, or a weak downtrend, or consolidation, as a matter of fact. What this represents, it shows us when we are very much above the Gaussian channel, so the distance between, it shows us an incredibly strong and volatile uptrend. As we push towards, it shows us a weakening trend. As we push in, it shows us a weakness in the overall uptrend, okay? And as we push below, there's midline over here, it tells us the uptrend has been lost. So according to the Gaussian channel, for the first time ever since we broke out on the 14th of Feb, we have technically lost the uptrend. Now, will this uptrend, should I say, will this downtrend continue on a higher time frame? That is something else we need to take a look at, is because if we go to a 2-hour chart, we can see we are only just bouncing on the upper side of this Gaussian channel, suggesting on the larger time frames, this uptrend is still intact, and that is very much the case, guys. Remember back to our video yesterday, we told you, although the smaller time frame is suggesting weakness, which will reflect as a rejection at some point, which we have now seen, it doesn't mean the trend is negative. The trend is still very much positive. We can see the price action is above the 50 EMA. The price action is above the smaller time frame moving averages. Okay, we do have a positive trend here. On the daily, the price is very much above the Gaussian channel. We do have an uptrend here. This is a current uptrend. We are currently in uptrend. When will the macro uptrend end? The macro uptrend will end when we do lose the 21,500 horizontal support and low of our last bounce, our last local low. If we lose this level, this will be the trigger for a continuation downwards. However, we can spot these continuations earlier than just on the macro. We use smaller time frame data. So going back to that smaller time frame, what are we really seeing here? Well, we are seeing a breakdown of the Gaussian channel. This is a warning sign. This is not a good thing to see. This is a suggestion that the downtrend is starting to build strength. The uptrend is losing strength at a significant level. Okay, it's not just losing a bit of momentum, it's really starting to lose its strength. And this could translate to a proper rejection and continuation downwards. Now, since we have reached, okay, our first target, we've been shorting ever since we reached these levels here, okay? We've been telling you guys we're looking for rejections at 25K. We're looking for bounces towards the downside. We're looking for healthy pullbacks. We don't think we're going to see new lows. I don't think we're going to see new lows at all, but I definitely don't think we're going to break our first attempt. This is a major yearly massive resistance, a resistance that's going to trigger the bull market. If we take a look at this resistance here, we're at the 50 EMA on the monthly, we're at the 200 moving average on the weekly, and we have major horizontal resistance. If we take a look at the prior cycles, every time we close a monthly candle above the 50 EMA after losing it on the yearly chart, on the monthly chart, we end up going into a macro uptrend, never to lose that level again until next bear market, okay? An incredibly important level, an incredibly significant trigger level that we do need to break above to confirm the macro uptrend. Remember, this is not a macro uptrend. This is a reversal out of a macro falling wedge pattern. This is a bullish consolidation, okay, an extension from the bear market, which we're in, the bear market being the descending channel, okay, descending channel. We had an extension, a bullish consolidation extension out of the bear market, resulting in a strong reversal, continuation upwards to retest the first high of the falling wedge, confirming the fact that the measured move of that pattern has been complete. We've confirmed the measured move, we've completed our reversal pattern. We're at macro resistance, we're at 200 moving average resistance on the weekly, we're at 50 EMA resistance on the monthly, and now we're starting to see weakness on the smaller time frame, which has now metastasized into a loss of the small time frame uptrend. Yes, we can go up from here, but it is more and more unlikely. Remember guys, I do not change the market. I don't control the market. I'm not sitting here telling you what I think. I am simply reading the charts. I'm telling you what the charts are saying. How you apply that, how you interpret it is up to you. But do know, I'm not bearish. I'm not bullish. In fact, I do have spot Bitcoin. I have spot Bitcoin since 16,500 and 18,000. I am at massive profits. I do not make money by telling you guys it is going down. But at the same time, I'm not going to lie to myself and look at the charts and know that there is decreasing momentum, decreasing volume, decreasing volatility. There is trend breaks on smaller time frames. We're at macro resistance and say to you guys that we're going to smash through 25K and go to 30K. It's not going to happen. And if it does, we will know when it does because it will happen when it does. We're at a trigger zone. The point of a trigger zone is when it breaks. That is when there's confirmation, not before. That is what a trigger is, okay? Once the trigger is pulled, the bullet fires. It's the same thing on the chart. Once the trigger breaks, we enter a massively low volume range. Look at this volume range here. There's absolutely no historical trading volume. We will fly through that range when it is time to do so. And when it is time to do so, we will be ready for that. But we're not going to go ahead and front run something at major resistance. Now, if we do push past, that will trigger a macro uptrend. That will result in the macro trend starting. That will facilitate a bull run at the end of the day. But until then, guys, we do have to be cautious about these warning signs. These small little warning signs popping up on the small time frame, as they can save you money. Now, if you are a long-term trader, if you are someone who wants to accumulate Bitcoin and hold Bitcoin, this is less relevant to you guys. This doesn't matter. Doesn't matter if we see a little pullback at 25.2K. We might go down a little bit, we'll bounce, we'll go back up. We don't think a new low is going to happen, so it doesn't matter. But if you're a scalp trader, if you're someone trying to scalp or trade these little swings, this information about the short term is relevant to you. This is important to you because you can use this to build a narrative and assimilate a structure and a plan in which you can use to trade the markets in the next couple of days. It is important and it is very much relevant. Anyway, guys, I'm going to leave the video there. I hope you enjoyed today's video. If you've got any questions, again, leave them down below. I do check every single comment. I do reply to every single comment. Be very much aware, if this does close below, we can see a continuation downwards here. If we lose this support level, the next support level is all the way down at 22.8. Okay, this will not happen in a day. This will not happen in a few days. This will take some time to play out if it does play out. Remember, guys, we are also finding support on the higher time frame Gaussian channel. Remember, this downtrend, this uptrend has only been lost on the small time frame. It needs to go lower to therefore extend to a higher time frame and start to delete these uptrends that have this uptrend on the higher time frame to confirm the continuation downwards and allow that continuation downwards to build strength. Until that occurs, this pullback should be deemed as a healthy correction rather than a confirmation that we are going to go lower. Okay, really make sure you remember that last statement. Replay it again, because I don't want to repeat myself, but replay it again. That is what it is. That's what you need to make sure. That's a key takeaway from this video. Definitely keep an eye on that. With that being said, I'll end the video. I'll see you guys tomorrow. Cheers.